How's it going out there? It's February 22nd. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Just came back late last night from a trip to Baltimore. It's pretty cool. Went there to tape a video, a big studio that we always use. But the video I'm very excited about. It's about how America is different now in terms of the crazy politics and money printing, the influence our government has over us, our economy, our lives following COVID. But I also take a look back at history of how this has been playing out, unfolding for a very, very long time, which has led to where we are today, which is the biggest wealth gap in the history of our country. So you could hold up a sign. I say this a lot. You could bitch on social media about everything and all the problems of politics and whatever side you're on, or you could learn how to make a fortune for yourself, your family, your kids, your kids' kids. That's what life's about. So there's a lot of bullshit out there, and people choose to complain and go crazy, but I highlight all the bullshit, and it's not so much where, you're going to take sides if you're a Democrat or Republican. I'm tearing everybody apart. I mean, you're going to see it on both sides of all the bullshit that's happened, all the garbage that's happened, all the lies that have been fed to us, and how the elite have made an absolute fortune off of all these policies, while hundreds of thousands of businesses have gone under, these small businesses, because of policies that are still instituted in some of these cities. You're seeing mask mandates being lifted and things like that, but yeah, it's not just about COVID, guys. It's every single time we have an event like this, whether it's a credit crisis and the rules are still in place, like the Patriot Act. Yeah, these things, once they happen, they don't reverse. Once the government gets more power, it doesn't reverse, meaning this wealth gap is going to continue. And these policies are going to be great for people who own assets, people who own stocks, certain stocks, and showing you how to be part of this by just taking a playbook out of the elite where any investor could actually do this. But this was a long presentation. I enjoyed it a lot, taping it, because it's something that's I think could identify with a lot of people and identify, why you're pissed off, but more importantly, what you could do about it. Because I think when people go, when your emotions are involved, it's tough. Everyone's pissed off. Even I get pissed off and I'll rant on something here and there, political, whatever. But the bottom line is both sides are not on your side. They don't care. They're going to talk a big game. They're going to tell you everything they're going to do for you, everything they're going to help for you. But the bottom line is they want more power, and they'll do anything to get it, as you can see what's going on with the country right now. But it's up to you to structure your portfolio the right way where you're going to benefit the most. And that's how I'm teaching you and teaching everyone how to do. So that's going to be a big deal. I'm really excited about that. And you'll be able to see that video presentation probably next month, late next month. I mean, we're going to be editing it and designing it and putting it together. But again, it's something I'm really, really excited about. I can't wait for you guys to see it. And thanks for the team that taped it. And those guys are great there. And actually, they're right. The person taping is actually listening to this and does all the background stuff for this. So I got to give him a shout out. Otherwise, he's going to shut us off. Anyway, but that was my trip to Baltimore, which is pretty cool. Good trip. Zip there, zip back. Planes both booked, Southwest each way, full flights. You're seeing a lot of things turn to normal. You're seeing prices go up tremendously, even ahead of spring break. It's pretty crazy right now. That reopen trade, which I would say we're a little early on, and we're doing much, much better on it now. But wow, there's still a lot of opportunity there. Now, let's talk about what's going on in the world, which is Russia-Ukraine. We're seeing more escalation. This comes on top of last week's news that Russia was not going to invade. So what does that do? The back and forth. It creates uncertainty. We all know the markets hate uncertainty, and that's why we're seeing a lot of selling. And a lot of unwanted selling. It's, the highly leveraged names I get, even if it's Pepsi, McDonald's, Carnival, they have 3 to 5% exposure. Altria has 8% exposure to Russia. I would think more people would be smoking cigarettes during times like these. I'm not even joking. So, I don't see how sanctions will play out there, for Altria at least. But a lot of leveraged names getting crushed. But just the uncertainty overall, and even of the Fed. But, looking at Russia and Ukraine, which is highlighted everywhere right now. You put on every channel, not just financial news channels, everything, right? They're invading. Now they're only invading certain parts. Are they going to invade all Ukraine? And the back and forths. Look, Russia and Ukraine. This is a story I think people aren't going to be talking about 3 to 6 months from now. It's a short-term problem. You're going to listen to a lot of noise, just like we heard a lot of noise when it came to China and the tariffs and trade wars. And this is crazy when what they say and what they do are two totally different things. However, the markets react on what they say all the time. Let me give you an example. The U.S. saying they're going to sanction Russia. We're going to sanction Russia. We do no business with Russia. Imports, exports, very, very little. So I don't know what we're going to do to hurt Russia, right? So Ukraine's not in NATO, so it would be an act of war if they were in NATO and Russia invaded, because that means everyone in NATO could, it's like declaring war on all of them. That's what NATO is. NATO is like a war pact, right? It's a group, hey, attack, it's just, it's not based on peace, that's based on war, right? So that's NATO. Now you're looking at Europe, and Europe has to be really careful here what they say. And basically not what they say, but what they do, right? Because they're talking a big game right now. And again, that's two totally different things, right? What they do and what they say. So if they place sanctions on Russia, it could be extremely dangerous, considering Europe imports 35 to 40% of their gas supply from Russia, which almost all of it, and listen to this, guys, almost all of that, 80% plus, flows through Ukraine to get to Europe. So how much leverage does Europe really have over stopping this? Not much. But it just goes to show you, when we look at companies and how powerful and, the social media and, our technology revolution, where our largest tech companies have $1 trillion plus market caps, a lot of people believe they run the world. No. Tech is powered by electricity, which is powered by natural gas, coal, oil, fossil fuels. You could throw renewable and nuclear in there as well, but mostly fossil fuels. And people that control energy control the world. That's why Russia's so powerful, stronger today from a balance sheet perspective than almost any time in its history. That's why Middle East countries, relatively small, are extremely powerful. And looking at Germany alone, which just said it suspended its Nord Stream 2, not 1, but Nord Stream 2 gas pipeline, right? So this is a gas pipeline that goes directly from Russia into Germany. And when they say suspended, that's what you see in the headlines. This is something that's not even flowing anything yet. There's nothing. There's no gas, nothing flowing through it yet. They just completed construction in September, and they were waiting on this. So we're going to suspend. There's no production coming from it. So they're really doing nothing, right? They're just talking a big deal because it's not operational right now. I mean, it could be operational. They said they finished construction again in September, but right now there hasn't been any flow. So they're like, well, we're going to suspend it right now, which is a little ironic if you think about it, because just last July, 2021, the U.S. urged, which means they told Ukraine, to accept this pipeline, this agreement between Russia and Germany. Because Ukraine was like, holy shit, you need us. 80% of this energy flows through us. Now you're going under Baltic Sea, whatever, to get directly to Germany, bypassing Ukraine. And Ukraine's like, holy shit, that could be a big problem for us. So Biden and Merkel got together. They gave Ukraine a $50 million loan. Germany set up a $1 billion fund to promote Ukraine's transition to green energy to compensate of the loss of those gas transit fees. So they were promoting this, and now they're taking it back. Again, talking a big game. But if you look at Germany, just for the record, and again, this has to do with all stock prices and everything, and this is why, I'll get to the bigger point of how this affects your portfolios in a minute. But Germany, again, just for the record, over 60% of its energy consumption comes from oil and natural gas. So I'm not sure Germany has that kind of leverage, which is why they're suspending a pipeline that is not operational right now, which is, I find funny. But the UK, I think those sanctions they just implemented are funnier. That includes limiting the amount of business it does with Russian banks, although they were very careful not to explain what this actually means. So nobody knows this. All right, what do you mean? You're totally cutting off business to them? Is it just limiting? And then they said, what else we're going to do? We're really going to come after you guys now. This is really going to hurt you. We're going to freeze the assets of 3 Russian billionaires, or their assets that are only in the UK. I won't curse, but what does that mean? What does it do? I mean, say we froze the assets of the 3 most wealthy individuals and whatever, Buffett, Gates, Elon Musk. What is that going to do to slow us down from invading another country? 3 individuals? So again, there's a lot of BS out there. and you want to weed through the BS, because when all is said and done, the UK and the US can't really do much to stop Russia from taking over Ukraine in terms of hurting them. They really can't. So what's going to happen here? Russia right now is in prime position to get whatever they want from the UK and even the US to prevent a full-blown invasion, whatever that's going to be under the table. There's always deals going on under the table, just like you show with China and the US. They talked a big game. We're not going to buy any products from the U.S. We're not going to distribute any all this was bullshit, smoke and mirrors, and they got their deal done, and everything was okay between China, and this is pre-COVID, right? We talk about 2018, 17, 18, 19. But it was a good 12, 15 months where the markets are going to crash, and this is crazy, and the tariffs and all this bullshit. When you really did the numbers and did the homework and stopped reading all the bullshit that they're feeding you, it turned out to be pennies. Pennies on the dollar, these tariffs, which were nothing. And now everything, hey, back to normal, everything okay. Same thing here. I don't see Russia, and I have no idea, right? I don't see Russia taking over all of Ukraine, but they're in prime position to get whatever they want if they just stop where they are right now. And again, they're into like two areas which are very pro-Russia already, just like if you're looking at the east part of Ukraine is more, European, which makes sense, all right, close to Europe. So let's see how this plays out, because for me, I think this is a short-term problem. I think it's a story few people will be talking about a few months from now. Again, these headlines, and it's crazy and holy shit, and I love how people are comparing this to Germany and World War II. I mean, guys, come on. Soviet Union, Ukraine was part of the Soviet Union since the end of World War II to 1991 before it broke off. Okay, that whole entire time, you did genocide and all this stuff. Again, you had started more world wars, and yes, we had Cold War and stuff like that. I won't give you, all the history and whatever, but and also since 2013, if you're looking, Russia made it very clear to Ukraine. I mean, this problem has been going on for a while. And since 2013, they said, don't mess with Crimea and don't talk about NATO. Don't try to go to NATO, and we don't have a problem. And Ukraine, thinking that the US and the UK had their back, which they said they do, but they really don't. They can't do anything to Russia. They talked a big game. They poked a big bear, and now they're paying for it, which is dangerous. I'm not saying whether it's right or wrong, whether you agree with Russia or Ukraine. I'm just telling you how it is. So Russia right now is in prime position to get whatever they want, and they're going to get a lot of shit to not total. And I don't think it even makes sense for them to take over all of Ukraine. But let's see how this plays out, and I think it's a short-term problem. And again, we're going to tear apart Russia, and we should tear apart Russia, and I had a rant about that. But guys, Ukraine is, if you're looking at the corruption index, and there's a firm that tracks this for over 25 years. Non-biased, non-political, non-profit. They're ranked as one of the most corrupt nations in the world. 122 out of 180. Behind like El Salvador and there's a list of countries I saw. I was like, wow, because almost every single election that they've had there has been fraudulent, a coup. It's been crazy there. And even now, if you're looking at the polls, that's the biggest thing, the corruption that takes place in Ukraine. It's a very corrupt place that's not democratic. But they're not some innocent place here where they're like, wow, you create these bunch of nice. No, absolutely not. I don't think it was a good idea to start arresting, wealthy Russian billionaires in Ukraine and shut down TV programs and stuff like that. I mean, really, you're not in a position to really do that with, Russia right next to you going, hey, don't F with us or this is what's going to happen. But the bottom line is they're in perfect position right now. I don't think this is going to be a big story. I don't know. I would play the odds here, and the odds are it's not going to be a big story. But Russia would be very smart to just say, hey, okay, this is what we're going to get under the table, and we're not going to invade, and we're perfectly fine. See what happens. I think what you really should be concerned about is the Fed. And I know that everybody is talking about this, so it usually means it's factored in, but I'm not sure. Because the Fed's about to begin on one of its biggest tightening cycles in over a decade. And it's going to be the first time in their history it's going to do this and have a tightening cycle while all the major indices, you're looking at the Dow, S&P, NASDAQ, Russell 2000, are trading below their 200-day trend lines. That's never happened in the world, right? It's usually the opposite. When shit hits the fan, you're lowering rates. Well, shit's hitting the fan right now. Money's coming out of the system. The Fed didn't even do anything yet. Which is crazy. March is around the corner. Expect that 50 basis point hike. I'd be surprised it's not more than that. Market will probably go up on that. And some believe we're going to see 4 rate hikes. Others are calling for 6 or 7 now. And some experts, many that I know, that I've talked to, believe that there's absolutely no way the Fed is going to raise rates 5, 6 times or more while the market is crashing. And to that I say, the Fed may not have a choice. They might have a choice if inflation doesn't slow down. So for the last year, pounding the table on this, saying money's being directly handed to people. And I'm not, economists are brilliant people, but you're looking at models, and I can tell you, every investment book right now, every investment book that you read right now, just take it and throw it in the garbage. Seriously, because we're in unprecedented times. This shit never happened before. You can't look at past charts or past Fed movements or where the S&P was trading and how it's trading now. Last time this happened, throw it out the window. You threw that out the window when you rejected $10.5 trillion into this market. And that was okay because you chose, lockdowns and people in trouble. And I get it. But that money was not given to banks to shore up the system like it was in 2008. It was handed directly to people and businesses, which is going to filter immediately into the economy. Now, here is why this is crazy and why it's dangerous to be behind the curve, where we had earnings, home prices, net household wealth, used car prices, all assets, basically, outside of gold, of course, all hit record highs this time last year. Not now, this time last year, they hit record highs. But the Fed, instead of saying, okay, things are back to normal, we weathered COVID, we still got some time to go, but let's start raising rates a little, let's start tapering a little. What did they do? They did the opposite. This is a year ago. They continue to buy treasuries and keep rates super low for another 12 months. Well, we saw trillions more being injected into the system, which has led to what? Led to supply chain concerns. It's led to still right now, you try to go to restaurants or bars and you could see these people are still not working. And they're getting paid more to stay home than they were to work, which you can't blame them. I mean, really, if someone paid you right now more money to not work and stay home, would you do it? I mean, can't blame them. But this is what happens when you keep injecting money into the system when you're not supposed to. Now you're behind the curve because inflation is the biggest problem. It's something the Fed can't throw money at to control. It's not like something went out of business or, the markets are getting crushed like 2008 and you're funding the banks, shoring up the system, bailing out everybody. You got to do the exact opposite. You don't have a choice. So people saying that, oh, there's no way. I can't see the Fed raise that many times. No way. They might not have a choice. I mean, have you seen the latest data? We were told for over 9 months now that inflation was transitory. 12 months. We're on 12 months of the Fed, the smartest people in the room, saying that this is going to be transitory because they look back at the past and said this is what happens normally, dating back to 50 years, 100 years, whatever. But this isn't normal. All this money injected into the system. Now you're backed into a corner. But look at the latest data. Again, transitory. It's supposed to be transitory, and they took away that in November. That's fine. And that's when we saw the markets really go crazy and come down and be extremely volatile since then, even to today. But now, even now, look at the latest data. Look at the CPI, retail sales, PPI, which is a producer price index. Look at home prices, which came out today showing an 18% year-over-year increase. 18%. If you own a house, good for you. If you don't, you're being left out. Now you're paying rents that are just going up through the roof, record highs. But when you look at the data, inflation is still not slowing. We're waiting for it, but it's still not slowing. I hope it does slow. That's going to slow the pace of the tightening, and maybe that happens. But we're waiting for it to slow, but it's not. I don't see it slowing at least over the next quarter. If you think I'm crazy, try booking a flight right now to anywhere over the next month or two. Good luck. Wait till you see how much that costs. Wait till you see how much the hotel costs. All the fees are going to charge you on that. I mean, it's insanely expensive to travel, but people are dying to get out because it's just, I'm in Florida. We were lucky. No crazy mask mandates. Our kids were having fun going back to school. Businesses remained open. Everybody was fine. Our statistics turned out to be better than most states, which had masks on every single second of the day and, had forced, You to get the vaccine to live your normal life, which is, going indoors to your favorite restaurant in some cities. Nope, you have to get a vaccine no matter what. Even if you're 25 years old and great shape, no underlying conditions, nope. Take away your freedom. Can't do certain things in certain cities. You can't go indoors. You couldn't see the Super Bowl. You can't do anything unless you show your vaccine card. Not too sure if you had to show the vaccine card in LA, though, for the Super Bowl. But I do know that I wear masks, which is insane. For the Super Bowl, paying $8,000 to wear masks. Anyway, when you're looking at inflation here, guys, we need it to slow. And it's probably not going to slow for the next few months. But once it does, that's going to be a boost to the market. With that said, what are we seeing right now? A lot of highly leveraged names getting destroyed. DraftKings, meme stocks, EV names, Virgin Galactic. I love Chamath. He's so smart. Gets into that stock. Space travel is going to be the biggest thing when the stock's at 10, 12, 14, 16, promoting the shit out of that stock, going all the way, whatever it went to, 30, 40, whatever it went to. Then he cashed out along with Virgin Galactic, right? The CEO cashed out. Good for him. Hundreds of millions of dollars. And now he decided to leave the board when the stock was like, 9, 8. I thought you loved it. Didn't you love it like 2 years ago at like 13 to 15? You told everybody to buy it and you got out a higher price. And now you're out of that company. He's like, I'm searching for other ideas. Good for you. You made your money. Who lost money? You guys lost money, right? Nobody pays attention to that. Nobody cares. As long as the retail investors buying what they're selling, they'll sell it to you. And like I say, they'll take every single penny. If you're laying there on the street with a sock on, they'll take the sock off of you and leave. That's Wall Street. It's a perfect example. But those are names that are getting crushed, the SPAC names. That's just, you can see you staying away from those names. There's still, Virgin Galactic's $3 million in sales and still trading at a $2 billion valuation. It was like 12, 13 billion. $2 billion valuation, $3 million in sales. It's pretty crazy. But there are a lot of small caps, even large cap names. Insanely cheap valuations right now. They have strong balance sheets. They're buying back stock, raising dividends. Expect to see strong earnings growth at least over the next 12 to 18 months. And earnings are expected to be strong over the next couple quarters. So I'm seeing lots of exciting ideas, even though it's a tough market. With that said, with so much money coming out of the market, and leverage is at its lowest level since June 2020. Remember that date. I'm going to come back to that. But we could see a little more downside in a lot of these high-quality names that you think are buys in the weeks and months ahead. They could get a little cheaper. So if you're looking at one of your favorite names, you're going to see a lot of these names make their way into our portfolios. For Curzio Research Advisory, because of venture opportunities, go in these positions small. Take a half position, take a third position, build it over time. Use that volatility in your favor. Because if you're looking 12, 18 months from now, you have a good shot. These things are going to be a lot higher. Why? Because when leverage comes out of the market, which we're seeing right now, right? So leverage coming out of the market and you're seeing short positions, more people shorting the market than ever, it's usually a bullish sign or contrarian indicator. Because the lowest leverage since June 2020, right? That's on record right now. We're seeing the lowest leverage since June 2020. Now, think about that date for a minute. What happened? COVID just crashed in March. Then yet April, May started coming back. In June, they were shorting like crazy, and it was almost the greatest buying opportunity in the past decade since the credit crisis. If you bought anything, you bought almost any name in June, outside of some of the SPACs, because a lot of them are trading below that $10 break point, but almost any stock you bought since June, you're up a ton on, even now, even after the sell-off. It's interesting, right? So now we're seeing the lowest leverage since that point, meaning that you're looking at hedge funds and the big money positioned on one side, which is a contrarian indicator. And if they're super, super bullish, what are they going to do? Well, they're going to sell. They're going to eventually sell, and that can result in a lot of money coming out of the market. Now you're seeing them taking bigger short positions, leverage coming out of the market. Now they're on one side. So you just need a little bit of a positive catalyst, resolve to Russia and Ukraine, the Fed not raising rates as aggressive, inflation slowing, and you're going to see this market really take off. And not all names are going to take off, but the names with strong balance sheets. You're looking at buybacks. We're going to see probably record buybacks right now. We're seeing companies raise their dividend. We're seeing companies beat and raise this earnings season and watch their stock fall 5-10% and are still trading 20-25% off their highs. these are the stocks you want to pay attention to. It's not, I know your portfolios are down. Most are down. The last 3-4 months have been crazy, but put it in perspective. Because while they're down, the 3 years before this, we saw the S&P 500 go up 30%, 20%, and 27%. Around those numbers. Annually, which is insane for a market that usually goes up 8% every year. Just like home prices up 8%, usually home prices go up 1 to 2% annually on average, if you're dating back all the way, past 50 years. So when you're going up 18%, could they go up 18% this year? Absolutely. But usually you're going to see that revert back to the mean, which we're seeing even in stocks. So people are like, I'm getting crushed and getting killed. And maybe you got more aggressive this year or late last year as everything was going up and, everybody's talking about how much money they're making. You should have did pretty well 3 years before, but put in perspective because there's a lot of stocks, semiconductors, energy, the reopen trade. I mean, these stocks are still trading at levels that are 30, 40% off their 2019 pre-COVID highs, yet their earnings are going to be higher than they were back then. Think about that. And demand, they have pricing power, and everything's opening up now. Even international markets are opening up. I covered that with Daniel last week. There's a lot of pockets that make sense. I do see positives. Our portfolios are positioned well. But again, buy those companies that have strong balance sheets, expect to grow earnings much faster than the overall market, because that list used to be small since a lot of those names with those qualities were super expensive. But that list is a lot bigger now. A lot of these names are down 25% plus over the past 2-3 months, even though they reported great earnings. They're about to buy back a shitload of their stock because they have great balance sheets. They're in the right growth areas. And if you're looking at EVs, if you're looking at whatever you look at certain markets that are growing tremendously within technology. And the chip makers are going to benefit a ton. I don't know if I'd go with NVIDIA, the best of breed, but it's super, super, super expensive. But, Skyworks might be a name to take a look at that pull back. Some of these names have pulled back, and they're in the right growth markets. They have strong earnings. They're about to buy back their stock. And we're looking at the macro, right? 1,000-foot view. Most hedge funds and big money are on the side of, hey, things are going to get a lot worse. And usually that's the time when it's the right time to buy stocks and things get better. Let's see how that plays out. I'd start picking away. You're going to see a lot of names make their way into the portfolio. But guys, that's really what's going on right now. I just wanted to provide that with you in the monologue. Questions and comments, I am always here from you. We're going to dig more into this with Daniel tomorrow and Thursday as well. So sending you questions. I like taking questions, not just for Frankly Speaking, which is our Friday podcast, which that's not on iTunes or our YouTube Curzio research page. That is strictly for subscribers, paying subscribers. No matter what service you're a subscriber to, you automatically get that podcast, which is basically a Q&A and everyone's sending in questions. But during this time, when you're seeing a lot of stocks, extremely volatile, getting lots of questions, guys, I'm here for you. FrankCurzioResearch.com. I'll take some more questions the rest of this week. Start sending them in, and I'll help you as much as I can. So that's a scoop. Again, questions, comments, I'm here for you. FrankCurzioResearch.com. Really appreciate all support. I'll see you guys tomorrow. Take care.